discussion. So, in today's class, our motive of discussion is basically accounting principles. So, let's start off with accounting principles. Accounting principles. And I'll also share all the recordings or income statement, statement of financial position, sales ledger, purchase ledger, cash book, petty cash book. So, you can also go through it before your paper. Principles. So, what are accounting principles? There are various principles which we apply in O level accounts, which we apply in our for our businesses. The first principle we have is beta business entity concept. Business entity. What is business entity? Business entity simply means it is also known as accounting entity. Accounting entity. I'm just letting you know because examiner could use accounting entity instead of business entity, so don't get confused. Both means the same thing. Business entity or accounting entity, it states that there should be separate entity convention, that business is an entity or body separate from the owner. Therefore business records should be separated and distinct from personal records of business owner. Therefore, business record should be separated from personal records of owner. Personal transaction cannot be treated in the same way as business transaction. For example, if I say that Ibrahim purchased a motor vehicle for his personal use, so that will not be part of business transaction. That will not be recorded in our accounts as our non-current asset because Ibrahim is purchasing a car for his personal use, not for business use. So this is known as beta business entity concept, also called accounting entity concept or separate entity convention, which states that business is an entity or body separate from its owner. Business is an entity or body separate from its owner. Therefore, business records should be separated and distinct from personal records of business owner. The application in which we can see in for this concept is capital account. Capital account, which is the investment account. If a owner introduces capital into the business, that will go in the capital account. Capital account and drawings account are kept for the owner, and drawings account are kept for the owner. Capital means investment into the business, drawing means withdrawing cash or goods for personal use. Then we have owner's personal transaction are not recorded in the business book. Owner's personal transaction, just like an example I gave you right now, that Ibrahim purchased a car for his personal use. So car, although car is a non-current asset, but he is purchasing it for his own use, so that is not going to be part of business transaction. Owner's personal transaction are not recorded in business book, are not recorded in business book. So this is known as business entity concept. I'll repeat it again. It simply states that accounting entity or separate entity convention, which means that business is an entity or body separate from its owner. Business is an entity or body separate from its owner. Therefore, business records should be separated and distinct from personal records of business owner. Major application of this concept is capital account and drawings account are kept for the owner. Number two, owner personal transaction are not recorded in the business. So that's the application of business entity concept. The next concept beta we have is dual aspect concept. We do debit credit due to this concept. Dual aspect concept.
Aren't there like 11 concepts or 13?
There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 concepts in total.
Why are you using the mobile? Why not the computer?
Okay, beta. So the next concept we have is dual aspect concept.
But
It is
how
also
I
known
memorize
as,
all of them? Can you send me the notes or something for it?
I have
If you
shared
have
the
some?
notes. I have shared the notes already with you. I think so. This is
Oh,
the
cool.
third time I'm sharing it. I'll send it again. I'll send it again, beta. You can check. Download kar lena. You can download. Uh, what are dual aspect concept? It is also known as double entry concept. So basically, dual aspect concept means that for every debit transaction there is a credit entry, which means I cannot say, let's suppose I said uh, expenses debit, marketing expenses debit by 500, and I didn't write anything on credit, so that's wrong. That's wrong because it will go against the dual aspect concept. As the aspect concept states that for every debit transaction there is a credit entry. For every debit transaction there is a credit entry. If I write anything on debit, then I must write something on the credit side, and both sides should balance. So that's why we do double entries, and for every debit transaction we also record it on the credit side. For example, if I say, let's suppose if I say with a paid motor vehicle, paid marketing expenses, dollar paid marketing expenses dollar 500. So double entry is going to be, according after applying dual aspect concept, double entry is going to be marketing expenses debit by $500, cash credit by $500. So that is going to be dual aspect concept. Double entry system: for every debit there is a credit entry of an equal amount. All transaction in accounting are recorded in this form. All transaction in accounting are recorded in this form. For every debit entry, there is a credit transaction. Does this make sense?
Yes.
The third accounting concept we have is going concern concept. Do you have any idea what is this? Ji beta.
Going concern concepts.
Going concern concept. Yes.
Wait, I think I've read it before in my book.
You must have
I
read it.
uh,
Okay. I'll
it
explain beta.
is, uh,
Acha, listen to me.
ensure that you meet your obligations and see a little bit of the how the business will be in the future.
Okay. Let me explain it in detail better. The going concern concept means that business will follow accounting concepts and methods on the assumption that business will continue its operation for a foreseeable future. Foreseeable future. Foreseeable future. Or foreseeable future means an indefinite period of time. An indefinite period of time. Indefinite period of time. Period of time. Okay, let me repeat it. This concept states that business will follow accounting methods on the assumption that business will continue its operation to the foreseeable future or for an indefinite time The major application of this concept is that we record our asset at cost less estimated depreciation rather than market values. The major application of this concept is that we record our asset on cost minus estimated depreciation rather than market value, since we know that market value will keep on changing and we have to continue our business. But if the business is about to shut down, then the non-current asset must be shown at the market values, that is disposal values. Okay, beta? Or should I repeat it
Okay.
again? Do you understand going concern concept?
Yes.
It simply means that when we are applying accounting methods, let's suppose depreciation, provision for doubtful debt, provision for depreciation, bad debt, we are applying these concepts based on the assumption that the business will continue for a foreseeable future. Foreseeable future means indefinite period of time. The major application is that we record our non-current asset at cost minus estimated depreciation rather than market value. Since we know that market value will keep on changing and we have to continue our business. But if business is about to shut down, then the non-current asset must be shown at market value. That is why we charge depreciation, because we are applying going concern concept. We assume that the business will continue for a foreseeable future. So when we are applying depreciation, we are trying to spread the cost over its useful life, spread the cost of non-current asset over its useful life. Achha, if you want to know, it's page number 31 of my notes for these concepts. Everything is mentioned on page number 31 in case if you want to revise. And also there is a lot of theory for cash book mentioned in my notes. So you can also revise that. Acha. The next concept beta we have is materiality concept. What is materiality concept? Any idea beta?
No.
Have you read it anywhere or heard of it?
Uh, no.
Acha. Let me tell you. देखिए बेटा, materiality concept means that items which are not material enough, not material enough, material enough. Do you know why we prepare cash book? We prepare cash book for miscellaneous expense, small expenses which are insignificant. So this materiality concept illustrates that example, that concept of petty cash book. Materiality concept simply means that items which are not material enough should not be individually recorded in the books of accounts. For example, I have purchased a stapler. I have purchased a stapler of $5. It's insignificant. It has nothing to do with my business. It's insignificant. Its value is very low. So I'm not going to depreciate it, although I assume that my stapler will have a life more than a year. It's a good quality stapler. It will have a life most probably more than a year, but the value is insignificant. So I'm not going to record it. I'm not going to depreciate this $5. Okay, so this is explained by materiality concept. Let me discuss this with you again. This concept of materiality recognizes that some type of expenditures are less important in a business context than others. So absolute precision in the recording of these transactions is absolutely essential. A business purchases a ruler. The ruler cost, let's suppose, $1. It is estimated that the ruler should last for at least 3 years. Technically, the ruler is a non-current asset and should therefore be classified as capital expenditure. To do this would be rather silly for such a trivial amount, for such an insignificant amount. The $1 would be treated as revenue expenditure and would be debited either to general expense or office expense. This treatment is not going to be have a significant impact on profit or valuation of net assets on the statement of financial position. The absolute accuracy of this treatment is not material. Okay? In short, this simply means that I'm not going to record a ruler as a non-current asset because the amount is insignificant. Although the ruler has a life more than a year. I assume the ruler have a life more than a year. But the thing is, I'm not going to record it individually as my non-current asset because the amount is insignificant. Okay, this concept simply illustrates that there are some type of expenditures that are less important in a business context rather than other. So absolute precision in recording of these transactions is not absolutely essential. I'm not going to record it a ruler as a non-current asset. I'm not going to record a stapler as non-current asset. Why? Because of materiality concept. If I start doing it, then it will be very time consuming, plus it will be costly for me also. That's why items which are not material enough, which are insignificant, are not recorded individually in our books of account. We just record them as a revenue expenditure, day-to-day expenses, miscellaneous expenses, small expenses, petty expenses. Does this make sense, beta?
Yes, it does.
The next thing we have is beta money measurement concept. Do you have any idea about money measurement concept?
Money measurement. Yeah,
Money
I've heard of it,
measurement concept.
but I've
Yeah,
forgotten. And then can I come back in 1 second?
okay, sure, no problem.
Try to.
Grasp all the concept. Try to understand these things. Okay. I will also discuss some MCQs with you. Okay, so that you will have a practice about it. When do you have your paper? On Wednesday.
But not on Wednesday.
On
I said that I'm doing self-study accounting, so she might take it on a random date.
okay, okay. Uh, Before your exam, if you wanna ask anything related to any question, any query, anything, if you don't understand, simply message me or ask me. I will explain it to you. Because that's not an issue. Chale, let's continue. Money measurement concept. So, what is money measurement concept? Money measurement concept states that items which cannot be measured in terms of money should not be recorded in our books of account. This is also known as monetary unit concept. Monetary unit. I'm telling you these things because in exam you might get these things. I don't want you to be confused now. Monetary unit. Both means the same thing. Money measurement or monetary unit concept. Transactions related to business and having money value are recorded in the books of accounts. Transactions which are related to business and having money value are recorded in the books of accounts. Events or transactions which cannot be expressed in terms of money. Events or transactions which cannot be expressed in terms of money do not find a place in the books of accounts. I'm repeating, do not find a place in the books of accounts. Event and transactions which cannot be measured in terms of money. For example, let's suppose if I say Sir Osama is a hard working employee, he is an asset for our company, but I'm not going to record Sir Osama as an asset in my books. Why? Because Sir Osama cannot be measured. My loyalty, my experience, my expertise cannot be measured in monetary terms. Okay? So event and transactions do not find a place in the books of accounts which cannot be measured in terms of money. For example, motivation, skills, morale of employees cannot be recorded in accounts. Does this make sense?
Yes.
Okay. Okay, that's why beta we don't record skills, we don't record loyalty of a person. If I say Ibrahim is an excellent worker, he's an asset for our business, I cannot record your expertise, your knowledge, your hard work in my books of account. Although you are a valuable resource, very hardworking, and you are a valuable resource for our organization, but I cannot record you as an asset or as an income for the business. Why? Because of money measurement concepts. Only items which can be expressed in terms of money. For example, motor vehicle can be expressed in terms of money. Uh, Building can be expressed in terms of money. Expenses can be expressed in terms of money. Therefore, we record them. But someone's expertise, someone's skills, morale of employees cannot be recorded in accounts. This is why we are applying money measurement concept. Okay, so the next concept we have is substance over form. What is substance over form, beta?
I don't know.
Let me explain it to you. Substance over form means that the real substance take over legal form. Real substance value, real substance is greater than legal form. Economic ownership is more than legal ownership of an asset. What does this mean? This simply means that we consider economic or accounting point of view rather than legal point of view in recording transactions. Major application is when we are leasing the asset, we don't have legal ownership, but economic benefits do flows towards the firm, so it is recorded as an asset. For example, I had taken a non-current asset on lease basis. Lease basis means that I'm paying a fixed rental every year. Let's suppose I'm paying a fixed rental, but I'm using that non-current asset for my business, so I am going to record it in my books, although I don't have legal ownership. I don't own that non-current asset. I've taken it on rental basis. I have taken it on lease basis. I'm leasing the asset. I don't have legal ownership. But economic benefits do flow towards the firm, so it is recorded as an asset. It it provides me economic benefit. It provides me profit. It helps me in generating profit. Therefore, I will record it as a non-current asset. Does this make sense? Now do you understand substance over form?
Yes, makes sense.
Okay. But the next thing we have is accounting period concept. What is accounting period concept? You must have also read it in book, or you must have heard it. Any idea?
Hmm. Oh, 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 please. Accounting